This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of October 24th, 2022. We began the week paying close attention to the dollar index, as we always do, on a daily basis. We're tracking the dollar, especially since it has come to control all markets, not just gold and silver, but anything considered a risk asset is going down if the dollar is going up. That's how we are trading, at least over the last 5 or 6 months. It won't be like that forever, but it is the way it is now. So in watching the dollar, watching its pattern of making new highs and then pulling back to its 50-day moving average before it makes another new high. So we wait now for the dollar to pull back to its 50-day moving average, and that's one of the things we discussed Monday, October 24th. Again, it's all going to key off the dollar in this kind of algo hell trade where you got the dollar and then you got risk assets. Risk assets all assuming the look of one universal chart. Dollar can, again, down today, but a green candle below that 112 level. I got 111.90 last. Is it going to pull back and reach the 50-day moving average as it has so many other times just this year? January it dropped below, made a high up near 97, late January, dropped below. Made a high up to 99 in March and then got close by the end of March and then went all the way straight up to 105 in May and then fell back to it. Made a new high near 106 in June, fell back near to it. Made a new high 109 in July, fell back and slightly below it in August. New high near 111, fell back. New high 115. So anyway, you get the point. What would bust risk assets? I can't even talk. Bust risk assets higher this week or next? A drop in the dollar index back to this 50-day or even slightly below, like it has a couple of times this year. Why couldn't it drop to 110 and then just go charging to a new all-time high, or not all-time high, but a new high for this move? So we'll watch closely, because if it does fall, then maybe you'll get a rally. Tuesday the 25th did bring some additional dollar index weakness, and it did bring a rally in the COMEX precious metals. But we noted that gold rallied early and then just kind of frittered away, wasted away. This is a problem when you're in a bear market, as rallies get sold instead of dips getting bought. And that was all part of what we discussed Tuesday, October 25th. Here's that intraday chart of gold I was telling you about with volume bars at the bottom. Huge surge. That those two headlines, housing prices, Richmond Fed, came out at 8:30 Eastern, 7:30 on this chart. And you can see that gold bottomed shortly thereafter at about 1642 or 3, and then rallied all the way to 1667, $25. But then, even though the dollar remained weak, actually got a little weaker, gold just backed off. Now, the bond market kind of tried to sell off a little bit over the course of the day. But with the dollar weak, you would have thought that after that initial pullback after the PM fix at 9 o'clock Central, the gold would have continued higher. Instead, all it did was just waste away on very little volume. Again, these are rallies that are being sold into. That will continue at least until gold's above its 50-day moving average and the machines get that flip of that switch. For now, we've seen this a lot lately. And it will continue until the trend changes. And then rallies will be bought. Okay? And dips will be bought rather than rallies sold and dips further sold. Okay? Anyway, I just thought that was a good example of that. Wednesday the 26th not only brought that test of the 50-day moving average for the dollar index, it actually plunged below, falling down about as far as it has been below during this 16-month rally in the index. What would happen next? That's going to obviously impact the precious metals, and it's something we discussed on October 26th. So again, all these things are aligning for a turn, and we're getting very close. One thing that would drive it, obviously, is your first chart of the day. That's the dollar, a top out in the dollar, where the dollar rolls back down from 115 to 100 to 90, that type of thing. Probably coming. Just can't say for sure it's happened yet. You can see it breaking down below the 50-day moving average today and the 110 low from back earlier this month. Okay, it's starting to look more and more like it's toppy. Here's the thing. At 109.71, compare that to the 50-day moving average, 110.77. It means it's 106, let's call it basis points, cents, whatever, below the 50-day. You got to go back to that period in January of this year. See that hanging down there? In January of this year, when it fell from 96 to 95 or in a couple of days. That gap between the 50-day moving average and the dollar index was 120 cents. So we have not been this far below the 50-day since then. And again, obviously bouncing from it consistently from about February, March on. I would, again, suspect we're going to bounce tomorrow. But we'll see where we go from here. And this chart, because of the breakdown today, now making a lower low, made a lower high, and now made a lower low versus earlier in October. Sure looks like it's finally getting toppy. It's not just gold and silver all the time at TF Metals Report. If you're going to track the metals, you pretty much got to track everything. Macroeconomics, politics, geopolitics, you name it. And we keep an eye on all commodities, whether it's the grains, whether it's the oil sector, you name it. They all matter. And one of the things we discuss frequently is crude oil. We also keep an eye on copper. And those were two of the charts we discussed on Thursday, October the 27th. Okay, here's two charts that you're going to want to make note of, especially tomorrow when we start talking about inflation expectations. Okay? Now you can say, oh yeah, crude oil is going to keep coming down because the global economy is in recession. Well, no, remember, cutting supply as well. So who knows about that? And if the dollar is going to turn lower, what's that going to do to crude oil? So here's your crude oil chart. This is December NYMEX crude with this 50-day moving average, riding it up, breaking down, the kind of catastrophic breakdown early in July and really below ever since. Getting above twice, end of August, early October. Coming off these lows, there's a blue trend line there too. So what will crude oil do? If it slashes through 90 and 92, oh boy, then you can definitely say the low is in. Higher crude oil prices mean higher gasoline prices. Well, look at the next chart. This is gasoline futures on the NYMEX. Now look, if you just took the name off this chart and you just looked at it and just called it whatever, call it Amazon, call it cotton, call it GDX, whatever. If you just looked at this chart, you go, damn, I came down pretty hard, 30%. But that sure looks like a low. I mean, you see it almost perfect, head upside down, head and shoulder, don't you? Get above the 50-day, hold the 50-day as support, now moving to higher levels than it was a couple of weeks ago. I mean, this looks for sure like it's going higher. And yet it's gasoline. This usually gets reflected at the pump about a week later, too. So here's gasoline, good 20, 30 cents higher than it was a week ago. You might want to go fill up your tank tonight. As the week comes to a close on Friday, October 28th, both COMEX Digital Gold and COMEX Digital Silver are down and giving up all of their gains from earlier in the week and look to paint their weekly charts with red candles. It's not just gold and silver that are down today. Really, all commodities are down and down pretty sharply as the dollar bounces back and interest rates move back up ahead of next week's FOMC meeting, which will go a long ways to determining where the metals head next month. Also next week will be the latest jobs report in the U.S. That's going to have an impact on where the metals head next month as well. So make sure you're paying close attention next week. As we wrap up this week, again, note that silver is broken down. It's trying to flag and consolidate, and it's been going on for about 90 days now. If it breaks down below 18, well, we got problems. But if it moves back above 21 and makes a higher high on the daily chart, maybe we'll be making some progress. So watch that very closely in the weeks to come. For now, though, thanks for listening to the TF Metals Report podcast highlights. We look forward to talking to you again next week.